Well, we're picking up our conversation with Keith Wade, Schroders chief economist. Now, Keith, we were talking really about how views differ on whether Greece needs to restructure or not. You think this has to happen?
Well, there is a case that they will have to restructure because the interest payments are not going to be sustainable. But I think the interesting question really is whether or not they restructure and default, or whether or not we get more support from the European Union. And the political will behind support is very strong. So we're certainly in the camp where we think that there would be a long way to go on this before we actually get a default from Greece.
And as a breakup of the euro, it does seem that a lot of investors actually are saying, well, yes, Europe is in trouble, but I still stand behind it. We just had reports that China denied what we earlier heard, that they were actually pulling some European assets.
Well, there have been reports about China doing this. I mean, China built up its reserves in euro over the last year as it wanted to diversify away from the dollar. But they don't necessarily have to sell euro assets. They could just accumulate them less rapidly. So it's probably not clear entirely whether they're actually selling euro assets at this particular point. I mean, I think in terms of this question about is the euro going to break up or not, I think there's still a long way to go on that because, as I say, the political commitment, the amount of support, the 750 billion euro package has not really even been brought into play yet. So I think there's a long way to go on this one.
Keith, I also want to ask you about these austerity measures because we're hearing some, IMF reports saying, well, actually, these austerity measures are so strong that they could derail the recovery. But if they don't go ahead with them, then that's going to hurt investor confidence.
Well, this is the dilemma that many of these countries face. What you need to see is fiscal restructuring taking place, but at the same time, monetary policy has got to stay very loose. So, we would certainly be of the view that the ECB has got to keep interest rates very low, no tightening for a long period of time, and probably the intervention that the ECB are making at the moment should turn into quantitative easing. I think that the talk about sterilising the purchases of bonds that the ECB are making, I think, is too early. So more monetary support is needed to make sure that those fiscal austerity measures don't cause a recession, which would be counterproductive.
Now, Spain is actually discussing these austerity measures in Parliament as we speak. Are there any countries that actually worry you more than others amongst these southern European states?
Well, I guess the focus is obviously on Greece. I think Greece is probably in a case of its own. Portugal and Spain are the other two, I guess, that we're most concerned about.
Keith, thank you so much for that. Keith Wade, their chief economist at Schroders.